Good afternoon, everyone. Welcome to the recap. I'm Laz, filling in for Scott today. There have been cracks at the seam, and I think the market is finally now starting to catch up to, what has probably been, for those who have been, actively participating and watching this market, a little overdue. We've seen a lot of technology and leadership stocks start to break down on earnings, even into earnings. And now the market finally playing a little catch up here. As we came in this morning to a pretty substantial gap down. That gap down didn't really amount to much. We saw, the first 30 minutes of the trading day, we saw some sellers stepping in, pushing the market into lows, bouncing back slowly through lunch, and finishing the day a little bit on the weaker side, but not really much of a day of conviction. We're going to take a look at that. We'll look at the SPYs here. And we did get a weak close. At one point, the market tried to put in a little bit of a snapback, but we are now clearly below support as the market, as I've talked about in earlier updates, midday updates, lower highs have been put in here, and we are now finally cracking that 142.50 area that the market's tried to hold a few times. I do think we are headed down into this general area. This is 140. And I've talked about this on the VTF. I also think you got to look up a time frame. We're actually going to go up to the monthly here because I think the monthly obviously is is the bigger picture, so to speak, and we need to keep an eye on how this monthly chart plays out. Primarily, what I'm looking at here is an undercut. Again, each candlestick represents a month of trading, undercutting last month's lows in the SPYs, which right now is 140.13. So we haven't undercut those lows, but we are quickly looking like that is what the market wants to do. And if we undercut those lows, that could open the door for a possible, test of this prior pivot low down here, which comes into play around 127 in the SPYs. So, and again, these are monthly bars, and this chart, will take some time to develop. But I think a lot of traders are keeping their eye on that undercutting of last month's low. And the spiders, I know for one, I am. That would be the signal that this trend is probably over, this uptrend that we've been in, and we could see a more substantial pullback develop over time. Now, the daily chart, the chart that we've been talking about and the chart that we've been watching, what really ultimately is going to happen or should happen here is, we might see one more downdraft in price. That would stretch us here off of these short-term moving averages, and then you might see a little bit of a snapback ensue. So I'm kind of watching for that structure to develop. I still think there may be some more downside left in this market. Possibly, like I said, 140.13. That's right around here. So I do think the market could probably undercut that low, and when we undercut that low, then we possibly could snap back. That is usually how things work. We take out support. Gets a lot of traders probably very bearish down here. And then when everybody, wants to be short, that's generally when the market will snap back. Just like when everybody wants to be long, that's generally when the market will pull back in an uptrend. So we're looking for that sort of counterintuitive trade here. And there's nothing about today that says that we, can't continue lower into tomorrow's session. So I think you got to watch for a little follow through into tomorrow's session. If we look here at an intraday time frame of the SPYs, this is what I talked about. We gapped down this morning. You can see this open gap. We traded lower in the first 30, 45 minutes of the session, came all the way back basically to high a day before late in the session, the last 20 minutes or so, kind of tailing off there and trading back into the mid part of the intraday range. Not an easy trading day for those looking for some sort of trending type of trade. It really was, sellers in the first 30 minutes, and that was pretty much it for the remainder of the day. We do want to look at Apple. Apple's one of those stocks I talked about, where it's been breaking down for a few weeks before the market even really started selling off. Was one of our clues is, once we undercut that support, that led sort of to lower prices. And I still think that we could, we can see a new low here. I actually think we could see down to maybe the mid 580s. And again, the earnings just around the corner here. But what I'm doing here is I'm using something called a fib extension tool, and it basically measures this first downdraft, this little bounce. And what it does is it tells me, the odds favor move down to this mid 580 level. And you can see there's some open gaps from back here, which has ultimately kicked off this whole uptrending move. So I still think we could see one more strong draft down here in Apple, and possibly in the days to come. The 200 EMA is right down here around 573. That's the 200 EMA. So we're going to keep an eye on that trade, possibly, like I said, over the next maybe day to 2 days. Apple did snap back yesterday. We saw this big up day. Everybody got very excited, trading right back into its declining 8, where today's sellers again taking control back. And this is the kind of trading you see in weak tapes, downtrending averages. These bounces, these 1 to 2 day bounces generally will get sold. And that's been sort of the MO for this market. So the S&P is playing catch up a little bit here. Some other stocks that have been battered and bruised. Google, kind of bottoming out here, finding a little bit of support in here. Didn't get through yesterday's lows. Not really a great trade. This is a broken chart, and like I said, it will need time to repair itself. And I suspect will be hard money for a couple of weeks even before it can really find its footing and potentially be either a calculated long or potentially another short trade. CMG as well, another stock's battered and bruised. I think the trade here in CMG would be if this were to take out, again, mean reversion. I'm looking for a trade back to the 8, possibly back to the 21. But again, this is a broken chart and a stock that does have a lot of selling in it. So if you're going to do that mean reversion trade, make sure you have an appropriate strategy. My strategy would be if we were to take out a prior day's high, which hasn't happened yet. We rallied this morning into yesterday's highs, but tailing down. So sellers still very much in control here, but I think this one is a little overdone. You look at the weekly chart, pretty stretched, kind of flirting with that 200 EMA on the weekly. But again, probing for support, and I don't suggest this for a trade until it actually does something of consequence, but definitely something on the radar there for those that like that mean reversion type tactic. Banks, what else? Goldman Sachs. We saw a little bit of a breakdown yesterday. You can see it broke the short-term trend line, tailing down yesterday, more like that, and then getting some pretty substantial follow-through today. Most of it coming overnight. You can see gapping down, and then again, that first 20-30 minutes of the day were brutal. Really didn't rally much into the close. Didn't see much of a snapback, so this type of trade usually gets follow through the next day. So we're going to look for some early morning selling to continue, maybe in Goldman Sachs. This is a very interesting looking chart. As we could see a trade back down to this prior pivot low around 110, 112 area. So keep an eye on the banks. The banks really have been one of the things that have been holding in while this market's been sort of crumbling. And today the banks, giving way and getting hit. JP Morgan, take a look at JP here. Not as aggressive to the downside, but slowly starting to decay in price. Another one, this was an intraday trade here in the VTF today. I talked about eBay, and eBay's been a great performer, had earnings, had that big bar up. You can see, big move up to new highs. But in bearish tapes, these types of patterns generally have a higher failure rate, and they will eventually come back down. So we're going to keep an eye on eBay. And today we caught it as an intraday trade on the VTF. You can see snapping up. Here's an intraday look, running into resistance, coming all the way back down, and then starting to work its way, and decline here intraday. So pretty interesting day trade here. And if you were in the VTF today, something to capitalize on. As I know a couple of guys, myself, we're looking at that trade on the short side once it kind of failed here. So depending on what you're looking to do and how you're looking to do it, there is opportunity in this market. It is a day trader's paradise. There's lots of intraday movement, most of it coming to the short side. But really, if you understand your technicals and you know where and why to step in, there are some pretty substantial opportunities. Volatility is pretty extreme. Speaking of volatility, we'll pop over and we'll take a look at the VIX. The VIX obviously seeing a big spike here over the last couple of days with the market. Now, I'm not a big VIX trader. It's not something I spend a lot of time, looking at or even trading. But when the VIX spikes, there's fear that sets into the market. And I want to watch this VIX chart over the next couple of days to see if it can consolidate. Because if it does, and it can build a base up here for a couple of days, fear. What it really would say is that fear remains in the market, and we could see another spike. So we got to keep an eye on that trade. And really, in a weak tape, there's not that much that's safe from selling. And what I mean by is, go back and even 2 weeks ago, we were some of these biotechs, Gilead looking great, Gilead today undercutting its prior support level, and there's room for these stocks to come off a little bit more. So keep an eye on some of these biotechs. Jazz snapping back today, ONXX. There's opportunity in lots of different places here, and I think you really have to have a very good functional plan. Whole Foods, another trade that I talked about, undercutting support today. Now, again, if you're a short seller, if you're looking to get involved on the short side in some of these symbols, you don't want to short lows. You never want to short lows. You want to short bounces. So for some of these stocks that have had large move downs, Amazon and Whole Foods and Apple, make sure you're looking to get involved into you're shorting balances into declining averages. And again, Apple's a great example of that. Look where stocks are failing. They're failing up here into declining averages. So you don't want to be shorting lows. It's one of my rules of thumbs. And for those that have gone through the active trader program, that that's something that we swear by. We teach it, over and over and over. You buy pullbacks into rising averages, you short bounces into declining averages. It is a much lower risk approach to trading. So, to sum up, we'll pop back over here to the S&Ps. We need to watch this. I don't think this is done going down. There's nothing about today's price action that says you need to be a buyer. Again, we just broke, support today for the first time. As we all know, markets can stay weak for long periods of time. And again, I think that this is a trade where you got to be very, very careful. I know there's a lot of traders trying to bottom pick. I think it's a dangerous trade right now. Again, if you're not someone committing longer term capital, meaning you're not looking for huge moves, there's lots of day trading opportunity out there. You just have to find the right appropriate setups. Look for stocks that are showing good relative strength, good relative weakness intraday. Especially in that first 20 to 30 minutes of the day, you'll find opportunity. And I think that's really, depending on how you like to allocate capital, make sure you're tuned into the VTF. This is when fear sets into the market, and again, we'll go back to the VIX. Fear is essentially panic. And panic, when you have panic or fear, however you want to look at it, it creates speed. And the one thing that we know about weak tapes is that they're very speed driven. Stocks will go down a lot faster than they tend to go up. So be aware of the market dynamics and the way price moves in a weaker tape. You will, if it's something you're not familiar with, something you don't understand, we haven't seen a lot of fear in the market over the last 3-4 years. But if fear does set in and we do see some more extremes, make sure you understand how this type of trading environment works, because it is very different than bullish markets that are much slower, grindier type of trading environments. And you're seeing it, even intraday, you're seeing stocks move, the ranges are expanding, the volatility is expanding. So, there's cracks under the foundation, if you will, and it's really, really important you tune into the VTF, you're educated, you know how to maneuver this tape, because if you don't and you try and, be cute, it can be a very punishing and harmful experience. So make sure you are ahead of the curve and not chasing the curve. As always, a planned trader is a profitable trader. I'm Laz, and I will talk to you tomorrow. Have a great day.
Hi, I'm Sean Hendelman of T3Live, where we train, coach, and mentor traders in order to help you put your money to work with confidence. The T3Live approach is a blueprint for you to recognize, adapt, and ultimately take advantage of different market conditions. To begin your training with T3Live, we would like to offer you the opportunity to enroll in our free 30-day online home study course. Fill in your name and email address, and I'll see you on the other side.